A question I get a lot from people is, how do I get an auto loan if I don't have the best credit or don't have any credit? Let's just say that your credit score is under a 600. I'm going to try to make this short and sweet, but after working at and owning a dealership for 20 years, I'm going to say these are the top 3 things that make it the easiest to get an auto loan if you're in this situation. Number one would have to be job time. A lot of banks really like job stability or having a long time at the job. They like this because they know that there is stability of income coming in, that you're going to stay at the job. You've been there for 3, 4, 5 years, and the money's going to keep coming in so you can keep making your payments. It doesn't mean you can't get a loan if you don't have longer job time. I mean, I've got people loans when they've just got their first paycheck. They've only been there for like 2 weeks, but it definitely helps get your down payment lower, and sometimes it'll affect the interest rate because it makes the risk lower for the bank. The second thing is having a cosigner. I know sometimes this is kind of hard to get because you don't have, people out there that want to cosign for you because they're, obligated on the loan as long as you are. If you have someone, a friend, family member, aunt, uncle, mom, dad, whatever, that can help you, this is a massive benefit too. Another thing that we see too is the co-signers always don't have to stay on the loan. Like, let's say you do a 5-year loan. The co-signer doesn't always have to stay on the loan for 5 years. Sometimes you can make some payments, build up your credit. You can refinance that loan after your credit starts to go up, after good payment history, and then you can get the co-signer off the loan and you can finance it just in your name. So I've seen that also happen too many times. If you don't have a cosigner, which is understandable because a lot of people don't, money down is always going to reign supreme. Money down in the bank's eyes is pretty much lowering their risk of the loan. Just in case the loan were to go bad, they wouldn't have so much money loaned out on it. So they wouldn't have to recuperate so much money. So I would say, let's say in Indiana, being able to pay your sales tax is a good minimum to start off with. On a $20,000 vehicle, our sales tax is roughly about $1,500. The bank wants to make sure that you can at least pay for your sales tax so they don't have to finance the whole car and roll some of the taxes on top of it. The day and age of only having $500 down sometimes still does work in certain situations. I've definitely seen it happen, but it's not as common nowadays. Some dealerships will just advertise $500 down just to kind of lure you in there in hopes that you have more money. I've seen a lot of dealerships do that, but generally having at least about $1,500 down seems like a good start point. And the third thing I'm going to say that's really important is having high income or higher income. Banks can really see that you can budget for a lot of things. They know if you have, rent, a mortgage, cars, whatever, a lot of other life expenses. If you're making, let's say, I would say a good income marker, if you're like $6,000 or $7,000 a month, that really helps them because they know you can budget for a lot of other things too. They just feel more comfortable with that. I mean, I've done loans with people who make $1,500 a month on Social Security. It's just, you have to find the right vehicle and the right down payment and really the right bank that's going to work with you. So hopefully that helped you. I'm Blake here from Main Motors. We're in Portage, Indiana. I've been doing this for like 20 years, owned a dealership for many, many years too. So yeah, check us out. If you have any other questions, just follow the channel.